Welcome to week. It's funny because I was calling this week 6, I think, again for the past few hours, and luckily Cal was nice enough to point out it is week 7 today. So we're most of the way there. We made it through a big chunk of the presentation so far, and today's a really one that I'm really excited about, and that's not just because I work in finance. We're going to talk about cash flow and funding. These are two things that are very critical, and I know that you guys got my emails, and I can only say it so many times. Cash flow is king. It is such an important part of any business that you're doing. You need to make sure, everything else aside, to understand your cash flow, because most businesses that fail, that is kind of where they fail on. So this is the agenda that we're going to be going through. We have the housekeeping we normally do. We're going to talk a little bit about last session. We're going to be meeting with Morley, who's my co-worker at Community Futures, and we're also going to be joined by a couple of bankers from RBC. So we're going to be joined by Sherry Kane and Angela Lundquist over at the side here as well. And as you guys know, I used to work for RBC, and I'm really excited. They're a new sponsor this year coming on board for the CEC. And a big reason of why I wanted to bring them on is because I am a big proponent of, I will not tell someone or refer someone to some place that I don't understand and I don't kind of believe in. And I know what the small business environment is like at RBC, and I know the people that work in that environment. And they're some of the better people that I've worked with in terms of lending, and I'm really excited to have them on board to talk to you about kind of their perspective on lending as well. And then we're going to have our conclusion. So last session, we talked a lot about different things. We talked about business law. We had Stringham Law Group was in to join us, and they talked a little bit about business law, things you guys need to consider for yourselves, and we talked about financials with YPM. Was there anything that you guys liked particularly last week that they talked about that really stuck with you that you kind of want to share? Yeah?
I could say that the whole doing your year-end report and stuff, that's only a small piece of the accounting piece, and the nice lady made the comment that you should use your accountants to help you manage your business as opposed to just do your taxes at the end of the year.
Definitely, and that's a great point. A lot of people think that that financial statements are a once-a-year sort of thing. But for example, with Community Futures, whenever I do a loan agreement with someone, we have a covenant in there that says, if we want to, we can request monthly financial statements from you. And certain banks will do the same. And they can really put anything in there as a covenant in terms of you reporting to them that they'd like. And so you're exactly right. It could be that you're looking at your financials much more often so you can see the trends. Accounts receivable turnaround is something that many people take a look at multiple times throughout the year, right? I really like that aspect as well. The other thing that I really like personally, break even. How she talked about how you have to know what your break even is. And that's something that a lot of people, a lot of business owners don't necessarily know, how much I need to sell so that I don't lose my shirt. And especially when you guys are figuring things out, I think that that can be a really important thing for you. Is there any questions about last week? Anything we talked about? Okay, I'm sure you guys know what's coming next. Any guesses what's coming next?
April 21st at 2 p.m.
At 2 p.m. Do not forget, April 21st at 2 p.m. If we get it in after that, it's not going to work. If you come in at 1:30, we have in the past had people come in at 1:30 that say, what's a balance sheet? And we can't really help you at that point because you're half an hour away from the deadline. So make sure that if you guys have any questions, you're a hold of me before then. Just so you know, next week I'm going to be talking a little bit about the requirements and everything. So we're going to go much more in depth about that next week, just so you guys know as well, and you won't have any excuse to miss that 2 p.m. deadline. So our first presenter that we're going to be talking to is Morley Bell, who I work with at Community Futures, and he's definitely a mentor of mine. Morley has 15 years experience with Community Futures, with lending, with giving advice to clients, and he's worked with businesses of all kinds. And on top of that, he's also an entrepreneur. He's owned 4 businesses as well in his life, and he's someone that I go to a lot when I have information. And so without any further ado, you guys know that I like to let my speakers speak for themselves. Let's get a round of applause for Morley, and I'll get a presentation.
Thanks, Jason. Good evening. I guess one of your requirements for this program is that you have to hand in a 1-year month-to-month cash flow projection. So tonight I'm going to go through that whole process. Some of the handouts I didn't have a PowerPoint handout for you, but at the end I'll put my email up on the screen and you can email me and I'll attach everything that you need. And having said that, you can also phone and make an appointment with us and come down and actually go through the cash flow step by step if you like. And it's no cost to you, and it's probably well worth your while. We have a lot of people coming in towards the end of the April 21, going through business plans and how to format and how to do your graphs and whatnot. You're certainly welcome to come down and use our services. We'd be thrilled to help you out. Having said that, once you're finished your cash flow, it's a good idea to save it in a JPEG format and then paste it into the business plan so that it is the one-page document. And I think that's the only financial thing that you have to hand in is that month-to-month cash flow projection. See if this will work. Okay, well, tonight I'm going to talk a little bit about financial control, how to use your cash flow forecast, how to manage your cash flow. And I'm going to go through and sort of explain how to put a cash flow together. I've given out an example of a very simplified cash flow projection, and we're going to go through it a little bit and go through some of the steps. I want to say, first of all, that when you're looking at building your business, build it exactly the way that you want it to be built. How many here are going to be self-employed, one-person operations? And then that's exactly what you want to do. How many here are building a self-sustaining business that's going to create freedom, flexibility, and time, and all those kinds of things? So if that's whatever your plan is, build it exactly the way that you want it to be built. Don't get sidetracked. Don't be a one-person operation and then start doing your business plan. All of a sudden, you're hiring 10 people and growing your business when really what you want it to do in your first couple of years is be by yourself. So remember that as you're going through. Don't get too excited about the marketplace out there, because you always have to do things according to your capacity in the beginning. I also recommend that everyone do a SWOT analysis. I think, Jason, you went through a SWOT analysis. But really, I call that a situational analysis, where you can really sit down and analyze where you are now. And then have a vision of what your business looks like in 5 or 10 years from now, so that you have a clear picture of what you're trying to build. And then your business plan is just from the SWOT analysis to your vision 5 and 10 years down the line. And that will maybe help you do your business plan as well. There's a lot of risk in business. I like to say that if you don't do your research and you don't do the legwork, it's like a crapshoot in Las Vegas. You're just high gamble, and it's all high risk and then the unknown. And entrepreneurs do not take high risks, they take calculated risks. So you want to take it from the unknown, do your legwork so that it becomes a calculated risk, so that you can invest all your money, all your time, your soul, and everything into this business, and build it with some good solid legwork and research done. Be as accurate as possible. We have lots of people coming in, doing their cash flows, and they say, can I have the form? And they say, just let me sit out in the front here, I can do it in 10 minutes, and I'll just conjure it up. And really, it takes a lot of work to do an accurate cash flow. If you say the rent is $1,000, and then make sure that you go out and verify that the rent really is $1,000, because you'll be following your cash flow day in and day out. So be accurate, and remember that entrepreneurs take risks, but they take calculated risks. And do your books. It's another thing that I stress at Community Futures, is that you need to be on top of your accounting every minute of your business life. If you don't know how to do your books, then hire someone to do them for you. Our board of directors are convinced that everyone should hire a bookkeeper, and they remain focused on building their business. But you really need to do your books, and we recommend that you do financial statements every month, so that you know where you've been. An accountant does an historical analysis of what happened, and can give you all kinds of feedback and advice on what you could have done better. But as entrepreneurs, you're out in the marketplace, scanning the market and making projections and all those kinds of things. You need a scorecard to really help you on the way. I put these two books up here because I really believe that businesses are built on systems, and that if you have systems in place, then things work a lot better. So there's one book up there called E-Myth Mastery, the 7 Guiding Principles to Building a World-Class Company. And what this book is about is that a fellow has studied the success of franchises and has applied it to small business, and this has some tremendous information in it. And I also put this billionaire in training. Brad Sugars is the founder of Action Coach International, and he has about 20 books, and they're quite simple, and you can go through and develop all kinds of systems for your business. Cash flow systems, HR systems, promotion systems, and whatnot, and they're pretty easy to read, and they're at the library, and we have them in our library. So I recommend that you become systemized, to really look at your business and develop some systems to follow. Here's a system that I was taught many, many years ago. When I finished university, I had the honor of working for the tea Eaton Company with a bunch of managers that were in the war, and it was after the war, and they were veterans, hardcore managers, and I remember having an office down the hall from the store manager. And every time I made a mistake, he would never phone me. He'd just yell my name. I have to run down the hallway. But this is a system that they used. You know, once per year, you prepare your annual cash flow projection. So if your business year is from January to December, then somewhere in November, you'd be building your cash flow projection. And you do it in its entirety for a year. Then, if, for example, if this is March and April's coming up, about mid-March you would reforecast. You'd go back to your annual cash flow forecast and have a look at it to see if you needed to reforecast, change some items, increase your sales, cut some expenses if you know you can. And then what you do is you commit to the plan, to really be hard-nosed about it and work the plan. And I call that, and I treat it as a game. You commit to it and you try and achieve exactly what you've written down on your cash flow projection. And at the end of the month, after the bank has been reconciled, then that's the scorecard. And that's where your accountant or you print off your income statement and your balance sheet and have a look at how you did. And really you want to make it a game. You want to listen to your accountant's advice and say what I could have done better and all those kinds of things so that you can improve. And then when I was at Eaton's, I had to do a variance report. And we did this process every Friday afternoon, once per week. And I had to write down what the variances were. If I had a 5% increase in sales, why was that? Or if I had a decrease in expenses, why was that? Was the weather involved? Was there an event or whatever that was? We had to explain the variances, and then we could change and alter the next month, so we could reforecast. So what I'm really saying is that once you have a cash flow system in place, you're really in your cash flow every day. And you're managing your business by looking at the numbers and how you could be better, cut expenses, increase sales, and all those kinds of things. So I always recommend develop systems, and develop a system that you can follow, month in and month out. Does everyone have this handout? This is a very, very simplified cash flow projection that is basically a furniture store, and I want to show you the whole picture first of what you're trying to build. And basically what you're trying to build is a basic month-to-month business budget on one sheet. The only reason that makes it a cash flow is that you carry the cash balance forward at the end of the month over to the next column, so that you can see how the cash moves through your business. But if you look at the bottom line on that handout, on that bottom line on cash balance, there can be no negative numbers. So is that person having some trouble along the bottom? What's the first area of difficulty? He's short how much? $547. So in that goal setting process that he's doing, who doesn't get paid? Probably he doesn't get paid. What's the next month? What's the short next month? 2,400? 2,600? Who doesn't get paid there?
Everybody.
He doesn't get paid, the landlord doesn't get paid. And then the next month it's what, 14?
Yeah.
So that's 30, 60, 90 days. But look, what's the cash balance at the end of the year at the bottom of the far right? 20 some thousand?
Yeah.
So he's gonna come out at a positive nature at the very end, but for 90 days in the middle, he's in trouble. So one of the things that you're going to make sure that when you do your cash flow, that you have no negatives in the bottom, along the bottom of the cash balance. Because a cash flow projection simply is a goal-setting exercise. And at some time, and I'll switch to the next slide. I'm sure everyone's heard about the SMART formula, writing goals, specific, measurable, achievable, being realistic, time specific, and all those kinds of things. But really, a cash flow fits that perfectly because it's a 1 year, month-to-month plan of action. The big thing is achievable. At some point, you're going to have to sit down and look at your business plan and also look at your cash flow projection and say, I can do this. I've done the legwork. This is as accurate as I can be for my first year of operation, and I can actually achieve that. You have to be able to tell yourself that. A lot of people will put together a cash flow projection that they can look at and say, God, I'll never be able to do that. Well, if you say that, then most likely you're not going to make it. And we tend to be legends in our own mind. I've had people come, I had one fellow come in and he was going to run a security company out of his basement. And after 6 months, he was going to have 122 employees running in and out of his basement. And his cash balance at the end of the year was $1.4 million. And I asked him, I said, can you actually stare at that document and say you can do that? And he had to really come along and make some big changes in order for him to be successful. So really, cash flow projections are pure goal setting, and you need to be able to achieve what you're saying. So then on that handout, how many here have inventory, raw materials, works in progress, and freight? How many? Okay, so under that, you can see on the handout it has cash in, which is revenue. The next heading down there is cost of goods sold. And it's kind of a retailer type of thing, but that represents variable expenses. So we have inventory and freight, works raw materials, they would go under variable expenses. And for all intents and purposes tonight, there's other things that you could put in your variable expenses, but for tonight, just remember that it is raw materials, inventory, works in progress, and whatnot. If you don't have those, then it's very simple. You have money in and you have money out. And your cash flow becomes really simple to put together, kind of a thing. So according to the, GAAP, or the Generally Accepted Principles of Accounting, it's cash in or sales less cost of goods sold equals gross margin, which simply is gross profit before fixed expenses. And then cash out is your fixed expenses. You notice that there's a startup column. And the reason that I'm going through this, by the way, is that our judges are very familiar with this format. And it might be worth your while to put it into this format. But there's a startup column there, and then in this example, he has a loan for $29,508, and he has some other financing for $100, and he's got existing cash of $7,800. So he has $37,408 to start the ball rolling. And down below, he's going to purchase inventory, $28,000, and at the end of his expenditure, he has $9,408, which he can use as working capital. And you notice that 9408 gets carried forward to the next column up top there. It says cash balance forward 9406. You move forward every month with that cash balance. What else do I need to say about this? This is an example of a cash flow that you pay. You buy a piece of furniture and pay cash for it. There's no accounts receivable. It's cash up front and you pay it. How many here are going to bill, invoice? So as soon as you send an invoice out, then whatever you've done in that particular month, really you collect the next month. How many here are skilled accounts receivable collectors? No, if you're skilled at it, that's a very good thing, because do you think that the next month you're going to get 100% of all the money that you are owed? Never. It's depressing. Maybe 75%. So you have to figure out 75% this month, maybe there's gonna be 20 the next month, and maybe 5, and then some might not even pay. So there's danger in the whole process. What about anyone in the oil patch? You know, oil patch takes, sometimes they pay 90 or 120 days. Can you imagine working for 4 months with no cash to pay, and the money's gonna be collected in month 4? And so there's a huge problem with debt and how to manage things. The big companies that do that, you're riding a rough ride as you put it together, because who gets to suffer? You do. You can't pay yourself. You can't pay your bills, and that whole thing. If you're not a good collector, then sometimes you'll be working so hard that you won't even stick your head up out of the clouds, out of working, and say, I need to do some collecting. So it could actually extend to 60 days. So then you're carrying your customers for another month, and maybe you won't be able to collect for 90 days. And if your spouse is trying to kill you in your sleep because you can't bring home the bread, and you can't pay your bills and all those kinds of things, it can get pretty tense. So I always say 15 days. If you can set up your system to collect in 15 days, that's a good thing, right? Try and send it out and pay within 15 days if you can. What else do I need to say about this cash flow? Basically, on the last column of the total, that's really, you can develop your income statement from that. So if you're going to do an income statement in your business plan presentation, you don't have to do an income statement, you just have to do that cash flow presentation. There. So I've already talked about it being a smart formula. It's an actual goal. You need to be able to say you can achieve it. If you think you can fool yourself, then find people that you really know and who really understand you, and show them your business plan and your cash flow projection, and say, do you think I could do it? So then that bypasses your sort of legend in your own mind type of approach too, so that people can give you an opinion if you can actually do it. So here's my stylized wonderful chart about cash flow. The red line on this graph is your fixed expenses, and the yellow blocks, because I didn't know how to draw a curve, are your sales. So in this picture, anything that the black underneath that red line simply is you don't have enough money to make your bills. Everyone see that? So what about Morley? And when he first opened up his very first business, what do you think he did in the months of May, June, and July when there was all kinds of money? Morley was saying money, 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 money. Holidays, buy a car, get all the equipment that I need, get everything, and then a little bit of a dip there, and say, well, God, I could scrape through, but I've spent most of my money, make a little bit more. But what happens to Morley in January? Very groveling behavior, like begging, paying half bills and all that. So I had a hard lesson when I first opened up my business in the 70s, and I opened up without a cash flow projection, without a business plan. I just was me, full of energy, and I learned how to manage a cash flow and do business plan very, very quickly. I lost all my hair at that point in time, and really I needed to know how to manage my cash flow. And it's brutal to not have that knowledge of how to manage. So in this diagram, if you had no capital to open your business, would it be good to open in January? Would it be good to open in April? What's your opinion? April? Because then you'd open up when the iron is hot and the market is saying, we're going to use your services, we're going to buy your products. If you start in January, you're going to have some money in place. And I believe that everyone needs to have a cash, I don't know, grub stake, war chest, whatever you call it, but it's nice to have a capital in your pocket to manage your business. Never ever let your bank balance go to zero, ever. Even if you have creditors and make deals with them or whatever you can, But what happens if you have nothing in your bank account? You can't even create the products, you can't even sell. It's just not there, so you have to work extra hard at your cash flow. And I just want to reiterate here, cash is really king. If you can't pay wages, you can't pay suppliers, you have no cash equals no sales, then you're in big trouble. I say that the cash flow projection when finished is your reality check. You can look at it and say, hey, this is the numbers, I can do this. So it's a really strong document to follow. So how to build one? Before we even get into this building this cash flow, you can certainly come down and see us. At the end, I'll have my email address on there. I'll send you all these PowerPoints. I can send you the worksheet with all the formulas done. I can send you all of that. All you have to do is email me and I'll attach it and send it back. And if you get completely bogged down, then you can come and see me. On the worksheet, I'm going to go back to the worksheet just for a moment. You see this total, these two totals here, $21,376. On our worksheets, if those two columns are exactly the same, that means all the formulas in your worksheet are right. So it's off by $400 and you've got a mistake in there somewhere. And you'll be driven crazy trying to find it. You might just email it to us and we'll be able to find it in about 4 seconds. But if you get bogged down, send it to us. So when you build a cash flow, I always recommend that you start by determine your expenses first, establish the trend of your product or service, or really, you have to look at the market and you have to look at your customers. When do they buy what you have to sell? Are there going to be some slow periods in the year where weather gets involved or the demand is low? So you're going to have some sort of a trend there. And look at your capacity to deliver. Lots of people go to the marketplace and they do their market research and then they develop things off of that. I say that in your first year of operation that you're going to really look hard at your capacity to deliver and build your cash flow based on that, and then go to the marketplace to verify that you have enough market to do that in. So how big should the market be for your product or service? All I can say is it needs to be big. How big? Really big, so that you and your competitors can grow. You can make a mistake and you're not going to be driven out of business because of it. It's a different thing to study the market and find out that in order for you to grow, you have to steal customers from somebody else. It's a different way of doing business. So really study the marketplace to make sure that you're in a big enough market so everything works. So then you do your market research, and then you're going to email me for the worksheet, and I'm going to email it back, and you're going to go from there. So basically, you have money coming in, and you have money going out. On the outside, if you have inventory and raw materials, you're going to have a column or a category in your cash flow called variable expenses or cost of goods sold. And then you're going to have your fixed expenses. You have your chart of accounts and whatnot. On the inside, you have to project what you're going to generate in the marketplace. How much, what kind of sales can you build? So you're going to look at your capacity to deliver. If you're a one-person operation and you're doing projects, how many projects can you do in a month and deliver? And you're going to be controlled by that, especially in the beginning. So there's a lot of work to do, and we have people that come in, and as I said, they can do it in 10 minutes, and I think they go out and have seances, and they see the local witch, and I don't know what they do, but they have all kinds of methods. And we have a lot of people saying, I have no idea, I'll just go out and invent it and bring it in. You know, if you did the legwork on cash flow and you found out all the expenses, are they accurate, and you really looked at your capacity to deliver, you'd have a very accurate document that you could follow and it would come true. So it's worth a lot of work. So step one really is to build your chart of accounts and have a look at what kinds of expenses that you have. So I've just put down some categories of expenses, but what kind of expenses do you have? So I've given you sort of a worksheet. Make some notes for a couple of minutes about what kind of expenses you're going to incur in your business. Will you have rent? How many are going to work out of their house? So if you're working out of your home, there's no household expenses that are going to fall into the cash flow projection. Because you're going to use your house and you're going to, at the end of the year, you're going to see your accountant and they're going to be able to take off a certain percentage based on the size of your office and all those kinds of things. So they would never show up in a cash flow projection. And that your pay, your salary that you're paying yourself, that's what you would pay your household expenses out of, kind of a thing. Another thing that's important is that a lot of people come in and they say, well, we're not going to pay ourselves for the first year. That's a sure way for us to decline your loan or application because you're trying to build a self-sustaining company that pays at least your wages so that you can exist. So really you have to build in pay for yourself. Do a personal budget and say, that's my line entry across on my cash flow. Question?
What if you're not aiming to make a sustainable business and instead you're looking for an exit?
Make you building an exit strategy?
Yeah.
Like sell your business?
Yes.
So if you want to sell your business,
Yeah.
you want to give it away?
So the business is sort of like a pesticide thing. So the value in the business is in the patentability of it and the actual intellectual property.
Okay.
So there's no sales in the first part. There's no expenses besides the patentability and the lab reagents and stuff like that.
So how are you going to live as you do this? You just work at another job and
Yeah, just
not
turn
build
this
it.
one off the next one.
So when you have an exit strategy and you're just going to sell intellectual property, then it might not be a business, right?
No.
But if you are building a company to sell, you need to really work hard at making sure that your business plan is solid, that your cash flow projections are solid, that your financial statements are accurate. So you build that business as though it was a product unto itself, so that when you put it on the market, it has value. And that's a good way to do it because then you get more money for your idea. How many are thinking about developing a business and selling it? Very good. And a lot of people can build businesses and sell it and make a fortune, move on to the next one. That's perfect. Intellectual property is great. I have a couple clients that their dream is to buy a sailing boat and by the time they're 34, they're gone. And I think they're going to do it. I think that's terrible. Okay, so just for the next few minutes, try and write down some expenses that you might incur that you have to investigate in your business. You can use this chart of accounts as a start, and I'll stop talking for a couple minutes.
Ask you a question?
Sure.
If you're anticipating a vehicle, for example, how do you build that in?
So there's a question that talks about, Mile, I was talking about cash flow to a group this morning, and they got really caught up on this vehicle stuff. So in most cases, you're going to have a logbook and you're going to record your kilometers, your distances that you travel. I think that the government rate is 44.5 cents per kilometer. So if you put that in your cash flow projection, you estimate how many kilometers you're going to do in a month. You times it by 44.5, and that takes care of your maintenance, even your car payment, your insurance, your fuel, and all those kinds of things, right? There are certain rules that you have to follow if you have a vehicle that is totally business, and I'm not sure about that.
I just finished doing my taxes in TurboTax, and you don't have any accommodation for that yet.
Is that right?
So you still do have to track your mileage and your maintenance and all that.
Yeah, you have to track your kilometers, right? What happens if you don't track your kilometers? And at the end of the year, you say, well, I've traveled 15,000 kilometers, and you haven't had a logbook.
You
What
get
does
nothing.
CRA tell you? You're out of luck.
Question, you have advertising there and those change, right? So although
Yeah.
they're fixed expenses, they're still variable?
Yeah, you'll plan it each month what you're gonna do, so you might have a heavy up in the beginning, and then it might be
Okay.
a little bit less. Question?
Yeah, we got a question from online. What if you're paying yourself on a percentage of what you make? How would you reflect that?
I think it's a good way, like it's a commission basis almost, right?
Mhm.
You could put that in as a variable expense, right? Then you get paid what the company generates on a percentage basis is good. I like that. Yes.
Like, for paying yourself, like, would you do the cash flow first and then kind of adjust your pay to?
Yep. I'd say you do your personal budget and then you put that line entry in and see if it works.
Would you
And-
go on the low
And
end?
I wouldn't say that you want to lowball it,
Yeah.
but we have people coming in that put $10,000 a month in their cash flow. They have a hard time getting a loan, but you want to starve to death either, right? So I'd say do a realistic budget. A lot of people say, well, I'm going to do a lowball cash flow and business plan, and then I'm going to do one that's what I think could possibly happen. And I don't agree with that at all. Put together your best attack on the marketplace that you think you can achieve, and that's what you're going for. Don't have a back door at all. So you're working on your business plan, and you look at a graph like this, and it's sort of establishing your trend or establishing when the market is going to buy from you and when the market isn't. If you have a flat sales plan, which means that you're always in demand, you'll have 8.33% per month, and it'll be flatline. But most products, most services don't happen that way, don't occur that way. We're in the loans business, so we don't have a lot of things happening at Christmas time, and so that affects our business. And in the summertime when holidays are on, nobody's interested in coming in and talking about loans lots of times. So it affects. I worked with one guy that built irrigation pumps, sold his entire year's work at farm shows in March and April. It was just like this. So it's pretty good. That gives him the opportunity to diversify. Like you might have a trend that goes like this. You might bring another product that goes in like this, so you even things out, right? So you have to build it that way. But in this exercise, when you look at it, it would be a good idea using your gut feeling, your own judgment, and start putting down a trend of what percent of the year's business you'll do each month. So if you're not doing any business in January, or you do about 2%, so put in 2%, make your own graph, and just to see what the trend might be. Should you do your research to make sure to verify that that's accurate? Absolutely. You want to do a graph that says you're booming in June and July, and in actuality you're down at 0. Could be quite a startling thing for you to do, right? So everything you do in a cash flow needs to be researched. The legwork is immense, and all those kinds of things. So establish a chart, a graph. When are you going to be busy, and when are you not going to be busy, so that you can have a look at and compare it to your fixed expenses. And then that'll tell you if you have to have working capital at some point of the year. You're going to promise yourself that you're never going to take any money out of your business.
Yeah.
That's another thing that Morley would have done in the 70s. He would have had all that money in a big bulb there and said, well, I could just pull out an extra $3 or $4 grand and go on a holiday. You know, keep all your money in your business for as long as you can and build it that way. It would be a very positive thing to do. And if you're going for loans, when lenders look at financial statements that see that there's huge dividends going out and shareholders' loans getting paid back, it's kind of serious. So you're going to make your chart, and then you're going to look at your capacity to deliver. So sit down and go through and say, how much can you deliver at 100% in a month? You'll never be able to do it, so you have to cut it back, but how much can you deliver in a given month? And that'll be sort of the start of your sales plan. what's your capacity to deliver? If you're working on your own, I was a self-employed individual on my own. Sometimes it was just brutal trying to generate all this revenue that I needed. So what's your capacity to deliver? Sometimes you'll be so skilled at selling that you'll be almost able to walk on water. And then you're gonna have to go home and say, how am I possibly gonna deliver it all? And so there's a lot of things involved in that whole process, but really, you need to look at your capacity at 100% and then cut it back. You know, what does it look like at 75%? What does it look at 50%? And can you operate and come out the other end in a positive nature? So that's how you build the sales plan initially. And just remember that you have money coming in and you have money going out, and the secret is to make more than you spend. To live within your means and make more than you spend. Any questions so far? We're doing good? So after that's all done, then you can do more market research to verify, is the market going to support your cash flow, your sales plans and whatnot. These topics of, is the market big enough, total potential market share, they're really for when the market gets a little bit tighter, and in order for you to grow, you have to steal customers from other people. You have to be very aware of how big your market is and whatnot. You all know you're going to open up in a big market, right? How big? A really big market, so that you can really prosper. And there's this benchmarking tool that's put out by Industry Canada. You can go on that website, and by using the NAICS score, how do you know what a NAICS score is? It's a industrial classification. You
Everybody
can find
should have your hand up.
if you can find your NAICS score, your number, classification, you can get a report that will go through all the income statement, and it'll tell you what businesses across Canada spend on rent, and what their gross margin percentages, what their profit percentages, and all those kinds of things. It's going to be very helpful. I usually put in infocanada.ca because that's a company that you could buy a list from, but you can use them for numbers. Like if you needed to know how many women there are in Lethbridge between 20 and 45 that make more than $50,000 a year, you go to Info Canada and they can give you that number for free. You'll be able to dig it out and say, well, there's 4,000 people that fit in that category that you could use in your business plan. I have bought a list. I moved to Calgary one time, and all I had to do was buy Info Canada CD. And at that time, Calgary had 50,000 businesses. I could just go through it. It gave me information like annual sales, how long they've been in business, what their credit rating was, how many employees they had. It's kind of neat. Name, address, phone number, everything. So it's kind of a neat list, and I've used them before as well. So infocanada.ca, and they have, it's by province in every state in the US. You can really get a lot of information from that research. And then you can email me for the computer-driven worksheet, which is similar to the one that I handed out, and you could build your cash flow using that worksheet, and we'd be very happy to send that to you. And you can work on it. How many are ready to work on their cash flow and finish their cash flows? Are you there now? Excellent. If you get bogged down, see Jason. But we'd be happy to help you out. And there's the worksheet again. One thing that I also should mention about a cash flow, a lot of people would say that they owe $1,200 for insurance. It has to be paid in July, so what they do is they divide the $1,200 by 12, and they put in $100 a month. But really, in a cash flow projection, you pay when the money actually leaves your account. So you would put that in June, $1,200. And that's how you track that as well. I forgot to tell you that. I talked about extending credit, so the day that you invoice is the the day that trouble arises, that you have to become an accounts receivable genius, and you'll be phoning people. I used to get in my car the last 5 days of the month and stop in on people face to face to collect my money at times, so that I got paid when I was supposed to get paid. But really, if you start to send out invoices, you have to be prepared. All the money that you generate in that month really will come in pieces for the next 3 months, and not during the month that you're doing the work. So calculate when you're actually going to receive payment, and accounts receivable management is very important. In the loan business, we're very, very good at accounts receivable management, but a lot of small business people will be working so hard at producing results that they barely have enough time to look for the next project or customer, and don't even pay attention to their accounts receivable. It could go 30, 60, 90. It's a disaster. So build everything out at 15 days, or cash on delivery, or whatever that is.
For smaller based businesses, could you just not give credit? Like, maybe they
Absolutely.
can pay with their credit card, but then you still get the money.
Finish
right?
the job, get the money.
Yeah.
That's perfect. I like that. How many are going to operate that way? I'll do the job, I want my money now. Just stand there. That's an excellent way to do business. Just some other pointers. Never let your cash balance go to zero. I've already talked about that. Really watch that. You know, sometimes you get a discount for early payment, so if you have a little bit of cash flow, but beware that you don't want to diminish your working capital. Pay when you have to. That means that if someone gives you 30 days, you should actually pay within 30 days. You shouldn't say, well, I'm supposed to pay in 30, but I'll squeeze them as much as possible and extend it to 45. So pay as you promised and how the agreements go, but pay when you have to. Watch for upfront prepaid expenses. I'll cash flow anything out. I want disposable income all the time in my cash flow. Now, if someone says, well, pay over 3 months, increases my cash flow, I'll do it. Just to have that working capital. Purchase equipment from profits. A lot of people will buy equipment, computers and everything from right out of cash flow. You have to make sure that you have enough money left in your bank account to carry you through the ups and downs. So you have to be really careful about that. So buy equipment and whatnot from profits, or plan, and make sure that you have it. Yes?
So we have a question from someone online, and when you're talking about specifically extending credits to clients,
Yes.
what's an acceptable interest rate for late payments from your clients?
Oh.
And assuming, and she's assuming, do you write those terms on the invoice?
If you're going to charge interest for late payments, it would be on the invoice. And if it's 2%, then you have to follow through with it and get the 2%. There's a very good chance that if you have a client and they're late, they'll make the payment, but they won't add the 2%. So if you put 2% in, then go get it. Then a lot of people let it slide, but it's a penalty, right? Keep your accounts receivable timely. I say 15 days. 30 days isn't good enough for me. There's always implications of extending credit. If you have a loan, you have to make sure that you can meet your loan payments. It's in the cash flow. You know, and really, the cash flow will really determine how much you have to borrow in the long run, anyways. So you have to be really. The cash flow is really critical. I was going to say something that completely went out of my mind. Many businesses crash due to poor cash flow planning. It's more often that you go bankrupt from running out of cash than anything else. Remember that a lot of companies would have a couple $100,000 showing at the end and as a cash balance, but for 120 days in the middle, there's just suffering, right? On that worksheet, I'll find that worksheet again. These negative numbers, he probably needed to borrow an extra $5,000 in the beginning to make that work. How hard is it to go back to a lender after you borrowed on your business plan, your cash flow projection, and you go back and say, I didn't borrow enough? How difficult is that to do? Sometimes it's very difficult. to get some more cash. And beware of the cash injection. If you're running out of capital, what do a lot of small businesses use for working capital? Credit cards. What's an interest rate on a credit card? You know, for small business, is it 19 or 20? We have one client that has a Visa merchant account, and it's worked out to 36% interest. So you have to be careful where you get your cash from. And beware of the cash injection, right? You go and keep building up your cash, but really you should be honing things down. I call the cash flow a reality check. You look at it and say, hey, this works. The business plan is here. When we read business plans, we read the executive summary first. We look at the cash flow projection second, because that's a reality check. Then we go back to the business plan, look at the marketing plan and whatnot. But that's what we read right away. It's pretty critical. You have to have cash to operate. I've included a couple slides in here for statements of personal net worth and whatnot that you could email me. You don't have to put that in your business plan, but if you're going out opening a business, you should know what your personal statement of net worth is. And I have a personal budget sheet that I can send you that you can build on how much you're going to pay yourself every month. When you figure this out, you can go to the CRA payroll calculator. Just put that in Google and you can use that to figure out what your deductions are. And so that also works very well. I used it for a couple of years and really keep track of things. Well, there it is. In one whirlwind approach, I've talked about cash flow for an hour. Any questions? I've gone through it pretty fast. I haven't given you any time to work on it or whatnot. Do you think it's doable? Do you think you can put it together?
How common is it to, you say like timely, you have your cash or your invoices paid within 15 days.
Yeah.
How common is it to initiate incentives, like to say like 210 net
Oh, yeah.
30 or something like that?
So if you can put that into your system, then you get your money faster. That's great.
Yeah.
Absolutely. You don't want, if you do the job, you want the money yesterday.
So that's actually a pretty common practice.
It is. Yeah, absolutely. Go after. Any other questions?
Could I get your email again, please?
Sure. Mbelle, M-B-E-L-L-E at albertacf.com. Jason had a bunch of my business cards. I had a bunch of my business cards, and we left them back at the office.
He does work for Community Futures, though.
And Bella.
So I will just email me, make an appointment with us, and do a great cash flow, because it makes it the judges really are watching and looking at that process. All right, super. I'll stop talking.
Thank you, Morley.
You're welcome.
Cash flow. I mean, in our job, Morley and I, because Community Futures, because of the nature of the lending that we do, and I've told you guys a little bit about this alternative lending, which means when they've been turned down by the bank, that's where we step in. So things like cash flow and business plans are two things that we look at every single day for different clients, and it is so critically important, and especially for forecasting. And forecasting can be a very complicated thing, that's for sure. So that's why having these records, and we talked about it at the beginning, can be so important for you guys in your day-to-day operations to understand where it's going. So we're going to take a really quick break here. Let's say be back at, we'll give you a 10-minute break, so at about 25 to, and then we're going to be joined by RBC with Sherry and Angela. So go ahead.